Hi guys, welcome back or to a new start even. Previously we had the Hot Pot podcast, but we're moving away from dentistry and now we've come up with a name. This is my guest Mike today, Michael Gallagher. He's a property investor, works in the property space, but we've come up and he's helped me pick out the new name and we're going with 99th Percentile Podcast, and this is the first guest, Michael.
Yeah, cheers, Vera. Thanks for having me on. Look forward to having a chat today.
Yeah, it's been a while since I've done this, so I'll be a little bit rusty, but I'm really excited to get back into sort of speaking to really interesting people. Previously it was all dentists and very dental focused, but now with me opening a business and moving into the business world as well as in the dental world, just expanding the horizons a little bit, and we're going to start talking about business in general, personal growth, how to improve your life and take things onto the next level. And Mike is one of the people that I've met in the last couple of months who is doing some interesting things and has opened my eyes to some bits and pieces. So give yourself a short introduction, Mike.
My name is Michael, based in Manchester. So we have a few property businesses, a property sourcing business, service department business, and then we do small development as well, so mainly buying and selling. Been in property about 5 years now, it's been got started and we've just kept going since then. We've grown different elements of it over the last few years, and yes, something I enjoy doing. So we're looking to grow and stay.
What were you doing before?
So I was at university. So from Ireland, came over to Liverpool when I was 19 to study pharmacy. So my view at that time was going to be a pharmacist, but I always had an interest in business, so I thought maybe I'll open up pharmacy business in the future. Then I was in second year, where I sort of fell into property or started kind of learning about it and finding out about it. So just thought I'm going to give this a go. So started up the sourcing business initially. So essentially we're working with people who are looking to buy property in the UK, mainly the northwest, 'cause that's where I was based. So basically was finding them deals, and then we were getting paid fees. So finding suitable properties for them to buy for investment purposes, and then getting paid a fee. So that's still our main business, and works really well. So we've now expanded, work with a lot of overseas clients, and also still UK as well. That was it. So, and once I got into it, I thought that this is for me and this is what I enjoy doing. So just stuck at it.
How far into university did you get before you
it was
the timeline?
It was third year. So I had third year was the first year I was doing both basically. Was the business was quite busy that time, obviously at university as well. Now obviously you're not in every day, so I was able to balance things. Then it came up to the summer and I was like back to being full time after exams and all were done, and I just thought I did not want to go back basically. It's still a backup which I can have, but for now it's just not something I really enjoyed that much, and business was for me.
So what was it that attracted you to pharmacy in the first place?
I think so I grew up, my family was very education driven. It was always, there's always a big emphasis on school, exams, getting good grades. So I was smart enough at school. I got decent grades, and was worked hard to get into that degree. Obviously it was relatively well paid, and there's opportunities, other jobs, and obviously to go into business with it as well. It was just when I got in, I thought, this is great, and then we got started, and just wasn't my cup of tea. I just didn't like it. At this point as well, this is when I started kind of reading some books and stuff, right? Personal development and being successful and stuff, and really figured out that you have to kind of enjoy what you're doing, or pick your own path. Just very early on realized that probably wasn't going to be for me. So just got into something else.
Yeah, so obviously you got into the property sourcing game, should we call it that? What was the steps? What was that first sort of encounter that got you in the door?
Yeah, so it was I was big on Grant Cardone at this stage. A lot of people probably know him. So what like YouTube videos and stuff. Obviously, he was big in real estate at that point. Um, so that was initially I was like, yeah, like this sounds interesting. Then I went to this free 2 hour event. It was on UK property, basically how you can buy with none of your own money, different ways of monetizing deals, etc. And I came away from that and just thought, yeah, like I just had my mind made up. I'm going to give this a go. So the lady actually that was presenting at that, I ended up messaging her a couple of months later, and I wanted to do coaching. Basically, I knew had a lot to learn, didn't know anything about it. So thought if I can get someone that's a few years ahead of me, they can basically teach me on what I need to know and stuff. So yeah, did coaching with Christina for 3 years, and that was amazing. It was different steps. 'Cause obviously at the beginning it's very difficult on what you need to do and different elements of the business. And yeah, that's how I got started basically. And I think as well the opportunity at that time was deals were easier to find I think than today's market.
Right.
Slightly easier. About the last 18 months or so has been more difficult. It's been a hot market and stuff. And yeah, that was just took it from there. And yeah, after a year or two, we business was going well, and yeah, we've branched out into other stuff on that now.
So a lot of the guys that are doing this, I know quite a few of you guys now.
Yeah.
You don't seem to go it alone. What is that? Is that something that's sort of ingrained when you're going through this sort of training, if you want to call it that? Like no one seems to be like on their own, or there's like a group of you and you're all discussing different ways of doing the deals.
Yeah, well, like any business, to be like networking especially is massive, especially in property. Like the amount of deals I've done through speaking to people, people being aware that I've got a lot of we've got a lot of active clients which are buying, so they'll if they're trying to sell a deal, maybe they come across a deal that doesn't work for them, they'll just ring and say, Michael, we've got this 3 flats, have you got any clients that would buy it? So if the returns work, then we'll probably have someone. So the power in partnerships and building relationships is massive for me. And yeah, that's been probably the most important factor in our success. Yeah, just networking with people. Like it takes time to build that up over a few years. But even when times get tough and that as well, or if I'm struggling with something, like I've got a lot of people now we can phone up, just have a chat about it. They're going through similar issues or have been through it. So yeah, a lot of value in that.
What's the I guess the hardest thing about what you're doing now? What do you reckon the most challenging aspect is?
For me, I was actually thinking of posting this last night. So in property, there's 2 things that you need to be good at. You need to find deals, and you need to be able to either fund the deals to do it yourself, or else be able to sell the deals. That ultimately the whole property business model comes down to that. Obviously, if you've got a letting agency or something, that's different. But if you're a property investor, that's the 2 things: finding deals, being able to either fund the deals, being able to raise money, or else using your own money, or else being able to sell the deals to other buyers. So that's always the 2 main things. The struggle is usually for a lot of people is finding the deals. Then for some people, they're very good at finding deals, but they can't raise the money on it. So that's where we come in as well. If somebody's very good at finding deals but doesn't have any buyers for it or can't fund them, then we'll take them on. We'll just pay them a fee.
Yeah.
So yeah.
Okay, interesting. So obviously, you've got the property, or the portfolio of properties, for example.
Yeah.
And then your job is basically to ensure that both the buyer and the seller are happy.
Yeah.
Obviously, you get a little cut in the middle.
Yeah.
It's part of the work that you do.
Exactly. The one thing I'm very big on is creating win-wins. So it has to be a win-win for both sides. Reputation is massive in business and in property. So if you can end up on one deal, you're making, say, 200k, but if you're shafting one guy or one, the buyer or the seller is being taken advantage of, you're going to get found out. So there has to always be a level where the buyer is getting a good price and the seller, and we can make our margin in between, then that's, but there has to be that win-win on both sides, which we're quite big on.
Yeah, and people are working at different positions. For example, people are just getting into the market, wanting to have something to give them some sort of passive-ish income.
Yeah.
And obviously, there's people that have done these houses up, for example, and they want to take a return on that. So there's always a win to be had between the two parties.
And
I
the
guess.
thing, like, if you speak in different circles, right? Like a good deal for someone, like for you, might be totally different than a good deal to me. Everyone has different buying requirements, so that's why we work basically worldwide now with a lot of overseas clients. So they because they're based, miles away, they don't like dealing with refurbs and stuff.
They want ready to set.
They want turnkey property investments, so that works really well for people in UK. They get involved in doing refurbs. They'll buy places that need a lot of work, do a refurb on it, and then they're looking to sell on a yield basis. The overseas clients then are looking to buy at a certain yield. So it works really well for them, and then again it's a win-win because the guy who's selling it's making a profit as well. Everyone's different requirements and what they're looking for. That's why like a good deal for someone else is a bad deal for another guy,
for another person. Where does the network, obviously the network comes into it hugely in terms of you need the network of sellers, you need the network of the buyers. How do you go about finding the right people? Because if you start from zero,
and that's where I was at one point. Like one is the knowledge gap. Like if you don't, that's the first thing you need to overcome. You need to start understanding there's so many moving parts in a property transaction or a deal, and a lot of things you need to understand, like the deal element, the finance element, the legals. So networking for me was getting out to networking events. Now a lot of these are quite poor quality, especially like local networking events. A lot of newbies and stuff there, but at the beginning that was ideal for me. Like a lot of people were on similar levels, some were like a few years ahead. Got chatting to them as we've grown now. I don't really go to as many of them now, but we go to you find the good events where the good people are at, and go there. Social media was massive for me. Instagram. I met a lot of my network through there. Especially Northwest, got to know people that were active and stuff. Meeting up for coffee, seeing what they were up to. Is there any way we can work together? And that's how a lot of my first buyers came through that. With meeting up there, like we're actively buying across the Northwest. I found some deals in, they were buying them. Events, social media. Just speaking to people, you have to get yourself out there. It's massive. Like if you're going to be sitting at home, just not getting out and speaking to people, it's going to take a long time to. You learn a lot as well, speaking to people, what they're doing, what strategies. Like even till up to this day, I hear people that are like, we're doing this. I'm like, I've never heard of that before. It's good.
Okay, interesting. It's. I mean, even in what I'm doing now with the clinic just having opened 3 months ago, a lot of what I need to do is to network to find the right people, not just as patients, but people that can then spread the word further. If you have the right person come in, for example, and they might even be paying for the work, but they can spread the word. They can spread it on social media. Because word of mouth referrals for you and for me. Obviously, we also have Google as well. I'm not sure that you're going to get so much from like a Google review, but that's how all businesses are going to grow.
100%.
By having good reputation.
You've leveraged massively, haven't you, the social media side, with the Instagram and stuff. Remember you used to do the lives and everything. Like I'm sure that was beneficial for you in networking ways and stuff.
Within dentists being really, really important. And obviously I built up quite a large following within the profession. Now we've moved into B2C or to the general patient or consumer, which means that audience is still useful, but let's say 60% of that audience was from the US or 40% or something like that. There's only about 8 to 10% that are actually UK based. So that 8 to 10% is not that useful because it's spread again across the UK. What's actually in Manchester that can send me root canal cases, probably very small. But in terms of reputationally, someone can look at that and say, okay, I'm thinking about going to a certain clinic, or
Yeah.
let's see what Jibber Jabber's doing. Okay, right, yeah, he's got quite a lot of followers. Obviously, you can buy those as well, but
Yeah.
okay, it seems like he's doing lots of cases,
Yeah.
and people saying, it's a good case, blah, blah,
Yeah.
blah, all that kind of thing. Look on Google, okay, he's got good reviews. So things start to tally up, and then you've got some sort of proof behind what you're doing and the work that you're doing. So there is that sort of build-up of authority or reputation.
Well, we were just speaking already about like the power of social media and that now, so we're thinking about doing a glamping site at some point, possibly in Ireland. You were saying you get travel people to do TikToks, Instagram, like anyone who's not jumping on that now on a business level at social media and the power of it is missing out massively. Huge opportunity there. I think I still feel like we're in early stages with that. It's going to be a very big part of business.
It's not going anywhere. Obviously,
No.
there's always accounts on all different platforms which are trending or whatever. So you just got to find the right people and have them endorse you at the right time.
Yeah, cool.
Is that something that you've managed to get into with the property business? Because that's a bit more difficult, right?
100%. Like we, so especially with our overseas clients, a lot of that came through social media. Again, network as well. So one of my biggest contacts in Singapore, they came through someone else who used to have a property sourcing business. They've now moved into bigger developments. So no longer do sourcing, and they introduced me to him. He's got basically a very wide base of contacts out there who are all looking to buy in the UK. And that was it, one introduction. And last year they were probably 50% of our business, which is big. They've backed off slightly now with interest rates going up and stuff. So them buyers are not as active.
Yeah.
But yeah, I mean, again, that's just one of the challenges. There's so many different factors. Rates go up, buyers pull out, stuff like that.
So are these guys buying? They're buying on mortgage then, or buy to let?
Usually with lending, yeah.
Yeah.
Depending on purchase, if it's usually 50 to 60k, they'll buy cash. Anything over that, they'll use lending.
So is there a certain sector of the market which is sort of booming at the moment with maybe the smaller price properties?
Smaller price properties always move very quickly.
Yeah.
Again, it's less risk for buyers. There's not, if you're buying something at 40k, there's not much downside. We always find once you go over 100k, it tends to be not more difficult, but your buyers are more limited. So it depends on a lot of HMOs or bigger HMOs can be 200-300k around in the north. That type of buyer is going to be typically more experienced. They need more capital, obviously.
Yeah.
But yeah, and then you move up then into the millions, and you're looking at institutional buyers, fund buyers, family offices, private equity firms.
Yeah.
So that's sort of the different levels.
So I'm guessing a lot of the people that watch this podcast certainly initially are going to be dentists, most likely.
Yeah.
Sorry guys. So for those kinds of people, what would be the steps to get into the property market? What's the best way to sort of, you made all this money from messing around with teeth.
Yeah.
But you need to sort of give yourself a nest egg, and I'm not a fan of the ISA. I think we've had a chat about this before. We'll get into that in a second. But what can those guys look at? What are the sort of property sort of initiatives that you would
so
sort
we
of
worked heavily with working professionals, or even with business owners in different sectors. So they have a dentist. Obviously, being a dentist, where making their money from, they're very active and are very busy with their work. So they're looking for an investment where they can put their money into to get a return on. So I would say podcasts, like smaller podcasts, just learn the basics of property, what you're looking to do. So we work a lot with, they'll buy to lets, HMOs. They're getting 8 to 10% yield return, and that it's residual income coming in every month. You can have a letting agent looking after it, so it's pretty hands off. I won't say fully hands off, but for someone looking to park their money, I think property is a good option.
And so you'd probably look into smaller sort of.
Smaller, especially when you're getting started. Yeah,
Yeah.
you know, like buy to lets is probably the simplest form of property investing. It's very easy to understand. It's quite simple. It's security wise is quite strong.
Yeah.
You know, you're just renting out to, you know, someone. There's always huge demand if
Because
you know.
there's obviously the Airbnb boom in the last 5-6 years. Is that something that's easy to do for people, or is it a lot more hands-on?
A lot more hands-on, I would say. I mean, you can have a management company. It's a lot more high risk. Income is a lot. You know, it's up and down. You know, good season, winter season tends to be quite poor. If you're looking for a stable return, you just rent it out on an AST. If you're looking for higher cash flow, potentially higher risk, then you look at service accommodation. Again, it all comes down to where you're buying as well. It comes down to location. You know, if you're buying in the Peak District, then, you know, service accommodation might be very good.
Yeah.
If you're buying in Manchester, obviously rental is going to be quite strong. Yeah, you know, it's the easiest form of investing, and yeah, we see it all the time.
Yeah. So you've got a bit of experience in sort of all these little bits. Would you say that if you were going down the Airbnb route, if you're just interested in a pure cash flow return, over the course of a year, would you reckon that you'd be higher than doing a simple let to a family? Or does it really depend?
It depends on how good your operation is. So if you bought in the wrong location and you're like, you know, your head is serviced accommodation, I'm going to make a fortune. If you bought in the wrong location, demand is not there, it's not going to fill. You're going to end up doing poorly. You've got your operating costs are a lot higher with serviced accommodation. You've cleaning, you've got booking fees, you've got a management company, you've got your bills to pay. It's a lot higher overheads than compared to just renting out on an AST. So that there's a lot more moving parts. If you've got, you know, 10 of them compared to 10 buy-to-lets, the work there is a lot more. Again, if you want to have a full management company look after them, you can do that.
Yeah.
But it all comes down to buying in the right location
and scale. Maybe once you get to 10 units.
Yeah.
Then you've got volume.
Yeah, and then also with service accommodation, we have service department business that we feel there's a lot more regulation coming in there now in the next couple of years, I'd say. So what's happened here is in a lot of towns and cities, people have jumped on this service accommodation boom. You know, they see, oh, we can make a lot of money from this house. Like, you know, people are renting out rooms in their home now. So, you know, we can make some money from this. So now, like towns, the rental stock has come away. Instead of people renting out to locals in the area on a long-term rental, they're now doing service accommodation. So again, demand is even higher for rental stock now. So local councils and stuff are definitely going to start putting things in place to, you know, increase basically stock in the area for rental.
So there's more option for people to live
exactly,
long term.
Yeah.
Okay, interesting. Yeah, where do you think things are going in the next couple of years? Because you've just had the interest rates rise.
Yeah, so the market's been interesting over the last couple of years, really. So I have never been in, like, since I got started, the market has just been going up. Obviously we had COVID come along, people thought, yeah, this is going to kill it. It flew. Obviously government brought in the stamp duty relief, which was massive. We're moving now, you know, interest rates were at their lowest ever, I think about 18 months ago, 2 years ago. Again, that was buyer demand was then massive because lending was so cheap. Now because inflation obviously is soaring, rates are going up a lot. Still, when you look at history, relatively low or average, but compared to 18 months ago, it's quite high. There's definitely going to be a correction, end of this year maybe, in the next couple of years anyway. You know, the property market's an 18-year cycle really. Goes up, goes back down. But when you look at it over a 20-year period, it's always, you know, the up, it's down slightly and then it's on its way back up. You know, it's not, America is a bit more dramatic. It drops heavily and then grows again. UK, we're quite slow and dinosaur thinking.
Yeah.
So it tends to be quite, nothing happens that
A
quickly.
bit more stable.
A bit more
almost.
stable, I'd say.
Less ups, less downs, or
Less ups
still
and less downs,
still going
yeah.
up slowly though.
Yeah, always like on average every 10 years prices go up 40-50%. So yeah, correction on the way in the next couple of years, I think. Again, they'll probably return to maybe 2020 levels, something like that. But anyone, they always say the best time to buy was yesterday, the next best time is today. You can't, nobody can time the market.
No.
You can't time the ups, time the downs. You just have to stay in it on the long term. And yeah, if anyone who's looking to buy to hold, as long as you're buying at the right price, then you'll always be doing well.
Okay, interesting. So would you say, we've had this conversation privately before, that I don't really like the ISAs because why would they give you something tax free? If it was so great they'd tax it.
My big thing on that is the reason I don't like stocks or ISA stuff like that is you're giving your money over. You're not in control of that. Like a lot of people don't even understand the
why things go up,
fundamentals of the stock market. Why things go up, why things go down. Property is very simple to understand, which is what I like. It's bricks and mortar. I can see it. I can touch it. It's physical. There's not many I can explain property to almost anyone, so that's why I like it. It's easy to understand. You can predict usually when it's going to go down, when it's going to go up. Nothing happens that quickly, so your risk is very low for me, which is what I like. If you can see potentially, let's say rates are going up now, if you're on a variable rate at the minute and you've bought, let's say, over market value, so you've made a bad decision, you've still got an easy exit on that. You can still sell it within 2-3 months and get out, whereas in the stock market that's not as easy. It can drop up and down in a day. So yeah, for me that's what I like about it. It's not, it moves quite slowly. Security is quite strong, and returns are decent. If you know what you're doing, if you're in the game day in day out, you can spot the opportunities where people are making big margins. That's where you can make your big returns. And yeah, it's you figure out what works and
what's not. Fair enough. Would you say you have any controversial sort of takes with property or not really?
We mentioned to me about property being hands off a few days ago. It's for me, it's not hands off.
I don't think it is. Generally, no.
You can make it as hands off as you can. It's not. If you want to make money from property and you don't want to lift a finger, give your money to someone to go and do a joint venture, or else like lend funds to someone, lend it to a crowdfunding platform. Like we take funds on from investors to do deals. They send the money over. They get a security charge on the property. Their money secured. We do all the work. If there's a refurb involved, dealing with the selling, any challenges that come up, and then at the end of the project they get their money back. If you want to get involved in buying and becoming an investor, the most hands-off strategy for me is social housing. Where you have a social housing provider take the property over, typically 7 to 10 year leases, 5 years potentially. They fully manage it. They take care of maintenance issues, and you just get paid every month basically into your account. That for me is the most hands off. Is it fully hands off? No. You're still
things to do.
There's still things to do. If there's a big maintenance issue, the roof needs replacing, you have to do that. So for me, it's probably one of the more hands off investments when you look across all investment areas. But yeah, not hands off. People are it's a hands off investment. It's passive. No, not for me.
Where are the biggest returns to be made within property, do you think?
so you always make your money when you buy. Like that's, if you're buying and hoping, you're you're in a bad place. You you need to be able to understand where the opportunity is. For me, I think social housing is massive at the minute. I think it's got a lot of legs over the next few years. The reason being is we have, in the UK, there's huge demand for housing. Like we have a lot of asylum seekers coming in here. I think since 1980 there is less social housing available, and obviously our numbers have increased massively. So I mean, when you look at the numbers on this at a bigger scale, they're talking about having boats now for asylum seekers, and it's like the shortage of housing in the UK is a huge issue. So that's why for me, rental demand is always going to be very
Increasing,
high.
yeah.
And social housing is, you're getting a long government-backed lease in place. Your income is essentially guaranteed for that period. They look after the property relatively well. You have no void periods, no management involved. So if you can buy at the right price, get a social housing provider to take it on. I think that's one of the best strategies at the minute.
Okay, interesting.
Yeah.
Should we start to wrap it up there? I know we've both got things to do in the next couple of minutes, so any sort of final tips for anyone? Where can people find you?
Yes, on Instagram, MG Property, and LinkedIn as well, Michael Gallagher. So yeah, always anyone feel free to reach out, and we can have a chat.
Yeah, amazing. So catch Mike on Instagram, probably the easiest place to find you. And yeah, this was the first, I guess, rebirth of the podcast, and we've gone with 99th percentile. So guys, make sure if you haven't already to like this video, leave a comment down below, tell us what you thought was interesting, what you want us to talk about in further detail. Can bring Mike back on if there's stuff that people want to know about, and also who you would like us to bring on as podcast guests in the future. And of course, don't forget to subscribe.